She's a real star in the area of international macroeconomics and the big India Connect at Harvard. Such a pleasure to have with us Professor Gita Gopinath. Thanks so much, Professor Gopinath, for talking to us.
Thank you. Thank you for having me on your show.
Give us a sense of what you're picking up when you talk to people here in terms of the mood in India. There was a lot of gloom and doom and talk of the Indian economy falling off the global radar. Has the new government managed to revive the buzz around India?
Oh, absolutely. I think if there's one thing that's happened, it's the buzz has gone up for sure, in a positive sense. If you look at any measure of confidence, if you look at business confidence, consumer confidence, if you look at rating agencies and their confidence in the Indian economy, everything is up. So now the question is what we will see next in terms of how these reforms translate into actual growth and into investment. That hasn't still happened, and so we have to wait and watch.
The next big thing is something that everyone keeps asking, and we also heard Finance Minister Arun Jaitley saying, you know what, there is no one big sensational idea, but these are small doses of reforms that you need to carry forward, and it's also all about consensus building. Do you agree with that view, or do you think India can do with some big bang reforms?
No, I agree that there are many things that need to be addressed, many issues that have to be addressed. I mean, some of the problems, some of the reasons why growth slowed down since 2011 was simple things like, the bureaucracy was in a chokehold, decisions weren't being made, projects that were being stalled, and licenses weren't being provided. So, and there was no government who was willing to take the tough decisions. That's changed. So the very fact that we are fixing some of the problems that slowed down growth should give you a reason why we should have growth back up.
Right.
Now, they've taken a lot of steps. Some of them are small. Some of them, I think, actually are fairly big. The deregulation of diesel prices, I think, is a big one.
Sure.
But I don't think that the finance minister can actually set aside big reforms. I think that those issues are going to come up. He's going to be forced to deal with them sooner than he thinks. For instance, the whole land acquisition bill is a big one. If he wants to bring up investment and infrastructure and all of that, he's going to have to deal with that. So it's true that, you might want to have some patience. You want to do the small things, but I think the big things will have to be addressed sooner than later.
Okay, big things need to be addressed. And of course, one big trend that has helped this government, and of course you talked about diesel deregulation, is falling crude oil prices. Explain to our viewers the impact that that big trend that we've seen in the last few months can have on an economy like India.
Oh, it's terrific. I mean, it's a big boon, it's a big positive from the global economy. Now, so for one variable, for instance, is inflation. And one of the reasons inflation has stayed high is because of the fact that commodity prices, whenever they go up, they show up in inflation in India. The pass-through from commodity prices into inflation in India is very high. So the fact that prices are going down is a good thing if you're trying to control inflation in India. The second piece is the current account, the trade deficit. Sure. It helps with that particular aspect because we're a big importer of fuel, and so if those prices are going down, that's also a big plus. Right.
Commodity prices as such, also food prices. Now, food prices are going down as well. Now, share with us the impact that that could have on a country like India.
Again, it works through the similar channels. The impact on inflation it's a good thing that food prices come down. But that said, I'm a little worried about how stable those declines in food prices is. I mean, those things can go up fairly quickly because there are many possible disruptions in the supply side, in the supply channels, and the distribution channels. And so unless those are fixed, I don't think we've escaped high food price inflation.
All right, let's talk about what's happening in the Indian equity markets. Every day we're hitting headlines with record highs being hit. Plenty of FIIs pumping money into India. Is it a sustainable trend, and does it reflect the real strength of the Indian economy? Right,
so there's obviously a great deal of optimism that's being priced into the stock market. People are putting money in expectation of where India will be in a year from now. It's not about what's happening right now. The expectation is with the reforms taking place that there will be high growth that's going to happen in a few years, or maybe even a year from now. Now the question is whether this is consistent with ground reality. In the last month, the reforms that the government have undertaken certainly give you a lot of reason for optimism, and so there's something substantial there. I mean, but that said, we still haven't seen these are the numbers. So for instance, if you look at investment numbers, if you look at consumer durable purchases numbers, if you look at industrial production numbers, the most recent numbers haven't shown a big uptick. So until that happens, it's not safe to say that this is, all of this is working out.
But just look at what's happened in the last 1 year or more. You know, last August, of course, just a statement about possible tapering sent the Indian stock markets into a tizzy. We saw our currency tumble. And now today we're up almost 40% from the lows we had seen last August. Is that in many ways reflecting the resilience? The currency more or less looks stable now. So how much has fundamentally changed in the last 1 year, which is reflecting in both the currency as well as the equity markets?
Right. I think one big fundamental change is better management of the macroeconomy.
Right.
And here I give credit to Dr. Rajan and the RBI. The fact that he's been very clear about bringing down inflation. Now, part of the reason why the rupee fluctuated so much during the last summer from the taper tantrum was because inflation in India had been very high.
Right.
The rupee hadn't adjusted. That correction hadn't happened yet.
Right.
Then this, the noise about quantitative easing in the U.S. slowing down, combined with the concern that we were living with high inflation in India, kind of brought the rupee down very quickly. So the fact that there's better management of the macroeconomy in terms of inflation coming down, inflation expectations coming down, I mean, that's a good positive sign for the rupee.
And now the stimulus has ended and it didn't seem to matter to the Indian equity markets at all.
Yes. I mean, part of that was because it was completely predicted. I mean, the reason the taper tantrum happened was because it was a surprise. It was a surprise event.
Right.
So, I think you can be fairly sure that when interest rates start going up, regardless of how well it's going to be managed in the U.S., it's going to be difficult to manage it very well in the first place.
Right.
But when interest rates start going up, there is going to still be some movement in currency markets.
Okay, and what will be the impact in India? What should we worry about in terms of the action that the Fed will eventually take, raising rates, for instance?
Right. So the one variable one looks at is the current account.
Right.
And the current account currently looks in a good place. It's about 1.7%, the deficit. That's the most recent numbers I've seen. But at the same time, I've seen some recent numbers for imports of gold, and they've gone up. So, that could be one reason why the current account deficit could actually get worse than the 1.7% number we're staring at.
Right.
So when there is a reliance on external capital, which is what the current account deficit captures, an increase in interest rates in the U.S. will have some shift of funds from the Indian market back into the U.S. market.
Right.
Question is how smooth that process will be. That's going to depend upon how well India is doing in terms of its own growth and in terms of its own reforms. So we'll just have to wait and see.
On the other hand, the big debate back home is that with inflation trending downwards, is there room for a rate cut now? Should Governor Rajan go ahead and bite the bullet finally, or will he continue to worry more about inflation?
Right. I mean, the RBI has done a great job until now, so I think we should leave it up to Dr. Rajan to decide when he cuts rates. That said, there are several indicators that suggest that this might be a good time to bring interest rates down. Inflation has come down, and this is not like a one-off thing. It's come down consistently. Inflation expectations, which is an important variable, has moderated. People no longer expect double-digit inflation anymore, so that has come down. The rupee being stable is a big plus. Commodity prices coming down is a big plus.
Right.
So, the RBI is trying to target 6% by 2016. I think the one thing they don't want to have happen is where they cut rates and then inflation is back up, and then the RBI kind of looks bad because it did it too quickly.
Right. But it's always a trade-off between growth and inflation, and many believe that growth is not being given its due chance, and this is the time when you need that little extra positive trigger coming from monetary policy to help revive growth.
Right. No, that's a fair argument to make. I also think that for growth, the reforms in the supply side aspects are very, very important. If they can make the ease of doing business much better, I think those are very good reasons to start investing in India. A 25 basis point interest rate cut would probably support growth too.
All right, you're someone who's talked about monetary policy in India not being very transparent. Share with us your views and why you think there's scope for change.
Right, so when I believe I said that in 2010.
Right.
And at that time it was indeed the case that it was not very transparent.
Has a lot changed.
And that has changed. There's a very clear communication of the inflation target. We're trying to get to 6% by 2016. We're going to keep interest rates high as long as we believe we need to do that to make that particular target be met. So there's there's no big mystery to it. There's constant communication, and I think we're doing much better on that front now. Okay.
Let's talk about some of the global factors in terms of recovery that's taking place in some of the other markets. The United States, for instance, there's clearly optimism that there is recovery happening and that the US economy is moving on track. But Europe is still clearly a worry. Explain to us how the global economic picture is emerging right now and how it could impact emerging economies like India?
Yeah, so there is certainly reason to be concerned about global economic growth. I mean, the US is one part that looks positive, but again, you know, it's growth which is not going to be at very high numbers. It's going to be low. I mean, the 3.5% that was recently came out is probably not sustainable. Right. It's going to probably come down. Europe is weak. Japan is weak. And so that certainly in terms of demand side, I mean, if you were exporting to these markets, this would be the slowdown in growth would be a big negative. At the same time, because of low growth in these regions, they're keeping interest rates very low.
Right.
And that's a source of liquidity for the Indian market.
Right.
So that's a plus. On the negative side is the demand side, and you know this is why the IMF was very concerned about global growth and its effects on emerging markets, and there's reason to be concerned about that.
But when you talk about FII money coming in, does India look a much more attractive bet right now than most other economies? Do you think people would rather put their money in India right now?
Oh, India certainly is looking very attractive. I think people are very excited with the new government, the sincerity with which reforms are being pushed through. And if you look at other BRICS nations, India does look much better. I mean, there are bigger problems in Brazil, there are big problems in Russia, China's growth is slowing down. And so for all those factors, India does look like a pretty promising destination at this point. But they're going to wait and watch and see how all of this translates into actual ground reality.
Well, right now liquidity is there and there's money coming in. It's all FII money after all. You know, what we need is real FDI investment that would be stable, that would stay. Is that a big concern for India right now, that they need to attract the dollars, but they may need to make sure that it's stable and not just necessarily what we're seeing happen in the equity markets?
That should always be a goal of a country like India, is to attract long-term stable flows as opposed to FIIs, which can be very short portfolio flows that come in and out very quickly. So we certainly need to attract more foreign direct investment. Now, for that is exactly the reasons why the government will have to take the big decisions about land acquisition, about labor reforms. If you want to have the Make in India campaign succeed, you have to address those kinds of issues, and that will take a little while.
All right, Professor Gopinath, before we wrap up, your one message for Prime Minister Modi and for Governor Rajan.
So let me start with that in reverse. I mean, I think my message to Dr. Rajan is that he's doing a terrific job, and he has more data than we have at this point to figure out how the economy is doing, and so he's best placed to decide about when interest rates come down, and monetary policy should stay independent.
Right.
To Mr. Modi is that there's a lot of excitement, there's a lot of expectations that these reforms will work. I'm a little concerned about the depth of leadership, in terms of the one person handling multiple portfolios.
Right.
So, it's great to have 4 extremely good people, but that's probably not enough. To bring about the ground changes in terms of ground realities. And so maybe I would push him to do more on building a bigger circle of high quality leaders.
All right, Professor Gopinath, such a pleasure to talk to you. Thanks so much.
Thank you.